Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and today's video, this is a first, we're actually filming from my office. So thank you for joining me. If you're into economics, finance, making money, and other things of that nature, please be sure to like, comment, and subscribe. It means the world to me, and it gives me motivation to keep on going and filming a pointless video, or hopefully a helpful video day after day, because I got to tell you, it's nerve-wracking, it's redundant, it's a little bit of everything. But without further ado, let's get into the meats and potatoes of this, which is Walgreens stock crashing 20%, 21% to be exact, which is correction territory, and the reason for it, which is a severe consumer pullback. The consumer is broke. The consumer is basically probably sick and tired of paying for overpriced stuff. I know I am. How about you? Please leave me a comment below if you're sick and tired of it. I am. And the Federal's absurd obsession with 2% interest rates, right? Why do they want people to pay more than 2% per year for products that they buy, or average, right? Remember, we're supposed to average 2%, and then all of a sudden they did such a good job of it at keeping interest rates at 0% for so long and printing 40% of the money supply that's currently in circulation in over a 3-year period. What's the result of that? That we had 30, 40, 50% year inflation. So anyway, let's get into the analytics of this, and then we'll discuss the economy as a whole. I'd also like to point out that Goldman Sachs also recently came out and told their clients to short the middle-income consumer basket, because the middle-income consumer is broke, right? Poor people are broke, and they're broker than they were originally due to Bidenomics, due to massive stimulant, which was also done under President Trump, and printing money and keeping interest rates artificially too long. And another thing I'd also like to point out is that General Mills also came out this week and said the same thing, and we'll probably do a separate video about General Mills as well. But they reported a dismal outlook as consumers pulled back on spending in the era of elevated supermarket prices. But it's not just elevated supermarket prices, it's elevated prices across the board. And even the elevated prices, for example, used cars, yeah, they came down, but they didn't come anywhere down to pre-2019 levels. So all we've had is inflation going up, up, and up. And okay, fine, some of it's going down, but it's not going down anywhere near where it started, right? So we're not averaging 2% inflation. It's more like we had 100% inflation over multiple years, and now we're just going down to maybe 98% inflation. So it's a joke. The Fed's target rate of 2% is a joke. Their average 2% inflation is also a joke. Anyway, Walgreens actually did better on their sales than expected, but they have a full week year guidance, or a full year week guidance based on the consumer. In particular, they said a worse than expected consumer environment driving higher promotional activity, negatively impacting retail margin. So why is that? That's because everything is priced through the roof. People are gouging. Yes, the government's also at fault for printing so much money and causing this and giving everybody free money and allowing everybody to go to school for free and forgiving their debts. Another video for another day. And what did they say? They said, we continue to face a difficult operating environment, including persistent pressures on the U.S. consumer and the impact of recent marketplace dynamics, which have eroded pharmacy margins. So what are those persistent pressures? Well, higher prices. And where do higher prices come from? Inflation. And what is inflation? The printing of the money supply. So it's ultimately a circular catch-22. It's going to continue to wreak havoc. And, you know, until there's enough lower and lower demand, then supply will go up. And as supply goes up, then they're going to have to lower prices. And then that's where you're going to have that happy medium of supply meeting demand. Unless, of course, the Federal Reserve lowers rates and turns around and causes more inflation, which is what they will do, in my opinion. I'm surprised they haven't done it yet, but they definitely will, in my opinion. And what else? So CEO Wentworth said the drugstore chain plans major store closures nationwide. The chain has approximately 8,600 stores in the U.S., and the executive said the company has yet to provide a final number of locations to close. I mean, if you have 8,600 stores, and those are huge, and they're saying major store closures nationwide, I mean, is that 1,000 stores? Is that 2,000 stores? Is that 25, 20%, even 10% of their footprint is huge, right? You take 860 stores, round it up, just say 1,000, right? A little more than 12%. And then you're talking how many people work at each one of those locations, 20, 30 people, 1,000 times 30 people, and you're talking serious impact to the economy, to the landlords that they rent from, and to the people of the communities that they operate in that they're going to shut down. And basically, what's the theme here? The theme here is that the low-income and middle-class Americans are suffering. Goldman recently illustrated this with charts, which was highlighted in a note titled "Goldman Exposes Bidenomics Real-World Disconnect. Low-Income Americans are struggling with high prices." Yeah, of course they are. And the problem with all these reports that they put out, like the retail index, it just shows spending. It doesn't show actual quantity or quality. So in other words, when I go to 7-Eleven, and I went there 2 years ago and a large was $2.50, and now I'm spending $3.15 for a large cup of coffee, which granted it's good, but again, do I want to be spending 50% more? Of course not. And what's the problem with the weak consumer? Consumerism is nearly 68% of GDP, right? So people are broke. Credit card debts are at all-time highs. I was actually going through old photos the other day, 2017, when I was shopping for my house. And, my house at the time was $360,000 or $370,000, whatever I paid for it. And it's now worth, $900,000. Granted, I put in a lot of work. I fixed it up. I did this. I did that. But other houses that were $400,000 are now $800,000. So just assuming a double, and granted, I'm on Long Island. There's only so much room to build out here and all that other happy horse stuff. That's still 15% an average increase per year. I mean, that's tremendous. And what else came out today? The Federal Reserve inflationary market numbers, and it rose 2.6%. So in other words, if you were paying $100 for something a year ago, now you're paying $102.60. Do you want to pay $100 for something, or do you want to pay $103? Of course, you want to pay less. So we want deflation. Deflation is good. I can't emphasize that enough. And so this all comes down to the consumer who's broke. And yeah, the wealth gap is widening as well. The rich get rich, the poor get poorer. Unfortunately, I've seen that manifest since I've been conscious of it, And listen, at least if you want to get rich, you can go get rich. You have to work really hard, but there's a price to pay, and you pay the price either way. Anyway, another recent survey came out. 4 in 10 Americans will stay put this summer as money is tight. In particular, 40% can't afford it. 30% travel's too expensive. 20% said they'd rather spend the money on other things. And only 6% were concerned about travel disruption. But the bottom line is people in America love to travel. And now they're not because of the economy. And what else do we have? 11 signs that the U.S. economy is in far worse shape than most people think. Delinquencies are on the rise. In fact, credit card delinquencies have now reached the highest level that we've seen in more than 10 years. Credit card debt's at an all-time high. Interest rates are at an all-time high. Buy now, pay later is at an all-time high. It's taken over like wildfire. You might as well call it buy now, pay never. So, again, if you have two major corporations coming out in the same week, Walgreens and General Mills, saying the consumer is broke, consumer's probably broke. And eventually, Wall Street should meet Main Street. Right now, we have an election. Whether we get Trump or Biden, they're still going to result in inflationary policies. The government is operating at a huge deficit. The debt keeps on going higher and higher. And we're basically on a highway to hell. So, If I missed something, please let me know. Hopefully, if you found this helpful, please, again, I beg you, humbly, I'm begging you and kindly to please subscribe. It means the world to me. We're almost at 1,000 subscribers at this point. And if you want me to film a video, anything in particular, leave a comment below. All right, have a great weekend. Have a great rest of the day. Thanks.